Welcome to the Gym Success Podcast. This is for you, whether you're a gym owner, an operator, maybe a manager, salesperson, a gym entrepreneur, or even a personal trainer starting out.
Yeah, welcome. We know you're always looking for that edge. And today we're looking closely at something really valuable. A white paper from Jim Thomas. He's a well-known expert in the gym business space.
Right, and the paper's titled Unlocking Growth Term Loan Funding Options for Gym Startups and Expansion. Sounds pretty relevant.
It really is. It tackles a core issue head-on.
Okay, so our goal here today is pretty straightforward. We want to dig into this paper, pull out the key insights, and give you some, actionable knowledge, stuff you can actually use to get the capital you need for your gym vision.
Exactly. Jim Thomas makes a point that, honestly, everyone listening probably knows deep down, capital is what fuels growth. But so many driven entrepreneurs get stuck.
Yeah, it's not usually the idea, is it? Or the drive.
No, not at all. It's often just access. Access to funding that's fast and flexible, funding that actually understands the fitness world. They hit roadblocks.
So what's the solution, Jim highlights?
Well, he points to something built specifically for fitness folks like you, an unsecured term loan program. And this isn't your typical bank loan.
Okay, how so?
It's designed to fund, well, pretty much the whole spectrum. Pre-revenue startups, places not even making money yet, expansions, buying into a franchise, even acquiring another gym.
And the key difference.
The key is getting around the usual roadblocks, the delays, needing collateral, all that frustrating red tape that slows things down with traditional lending. Jim's paper focuses on bypassing that.
All right, sounds promising. Let's unpack that. How does it actually work and how can you use it?
Let's get into it.
Okay, so let's really explore what makes this funding option different. Jim Thomas is really clear. This isn't like an SBA loan or your standard bank line of credit.
Right. It's structured differently,
Yeah.
and it seems to be really grounded in the realities gym owners face. Like, it doesn't demand a full-blown business plan up front.
Oh, interesting. That's often a big hurdle.
It is. And it also doesn't require you to tie up your personal assets, your house, your car, or even your business assets like existing equipment as collateral.
No collateral. Okay, that's significant.
Very significant. And then there's the speed.
Yeah, you mentioned that. We're talking same-day pre-qualification.
That's what the paper highlights, yes.
Yeah.
Same day pre-qual, and then the actual funds often deposited in just a matter of days.
Wow. From your perspective, think about trying to grab an opportunity. Maybe a great location opens up. How important is that kind of speed?
It's critical. In this industry, timing can be everything. So connect that speed with the no collateral, no business plan. What you get is flexibility, real flexibility.
Meaning you can use the money how you see fit.
Exactly. The paper stresses that. Opening that first gym, paying franchise fees, expanding to location number 2, maybe buying out a competitor who's struggling.
Or just investing back into the business. Marketing, better equipment, hiring good people.
Precisely. It gives you that financial runway without the lender micromanaging every dollar, that kind of autonomy. That's a huge advantage in a fast-moving field like fitness.
Okay, this is where it gets really interesting, I think. Let's dive deeper into the specific benefits Jim Thomas highlights for this term loan.
Yeah, let's break them down. First up, the one we touched on, same-day pre-qualification.
And that's not just talk.
Apparently not. According to the paper, you submit your documents, and you get that initial yes or no the same day. No waiting weeks in uncertainty.
That immediate feedback alone must be valuable for planning.
Absolutely. Then, the really big one for many, no collateral needed.
Yeah, explain that again. You're not risking your personal stuff.
Correct. It's unsecured capital. So, unlike traditional loans where you might have to pledge your home or your car or even the equipment in your current gym.
Which feels really risky for a lot of entrepreneurs.
Yeah. It does. This loan isn't directly tied to those physical assets. It lowers your personal risk profile quite a bit. Jim's paper positions this as a direct answer to that challenge many fitness businesses face.
So if there's no collateral, how do they decide if you qualify?
That leads to the next point. No business plan required. It seems your personal financial picture tells the story.
Meaning?
Your personal credit history and your verified income from your tax returns. It simplifies the whole application massively. It focuses on your track record, not complex projections.
That seems more practical, maybe? For someone who's great at running a gym, but maybe not at writing a 50-page business plan.
Exactly. It acknowledges the realities for many entrepreneurs.
Okay, so same-day prequel, no collateral, no business plan. What else?
Fast funding. Once you get that pre-approval, the paper says funds typically hit your account within a few business days, direct deposit.
So the whole process is quick.
Efficient, yeah. It lets you move when the opportunity arises, not weeks later when the capital finally shows up.
Got it. And the last one.
No usage restrictions. This is about control. You decide how the money gets spent.
The lender isn't dictating terms on spending.
Nope. The paper makes that clear. Need it for build-out, tenant improvements? Fine. New treadmills, hiring trainers, software systems, marketing for the launch.
Franchise fees, lease deposits.
All covered. You allocate the funds based on your business's actual immediate needs. That level of flexibility is really key for adapting.
Okay, so it sounds quite different. Who exactly qualifies for this? Is it aimed at anyone in the fitness space?
Well, it's designed for, as Jim puts it, real entrepreneurs. The basic criteria seem pretty straightforward, focused on your personal financial health.
Like what?
Minimum credit score, 680 or higher. And that's across all three main bureaus: Equifax, Experian, TransUnion.
Okay, 680 plus. What else?
Minimum income of $50,000 per year, verifiable for the last 2 years.
Verifiable meaning tax return.
Exactly. And you need to be a U.S.-based applicant. Your income can be from regular employment or self-employment as long as it's verifiable. It's about showing personal financial stability.
Makes sense.
Yeah.
Now, what if someone's listening and thinking, my credit isn't quite 680?
Good point. Jim Thomas offers a tip there. Consider a cosigner.
Like a spouse or partner?
Yeah, or a business partner, even a family member who does meet the credit requirements. That can often be a pathway to qualify, which shows some flexibility in the program.
Okay, that's helpful. And the application process itself, you said no complex business plan.
Right, and according to the paper, it's remarkably simple compared to traditional loans. No mountain of paperwork.
So what do they need?
Just two main things: your full FICO credit report, all three bureaus, and your personal tax returns for the last 2 years.
That's it?
That's it. It seems really streamlined. Submit those, get the same-day pre-qualification we talked about.
And then funding in a few days, if approved.
Correct. The efficiency seems designed to match the pace entrepreneurs need to move at.
Okay, let's make this concrete. What does this mean for you, the listener? How are actual fitness entrepreneurs using this kind of capital? Jim's paper gives examples, right?
Yes, real-world use cases. We see startup success stories, like a new gym owner getting $125,000.
What do they use it for?
Lease, obviously. Essential cardio gear. But also, critically, their grand opening marketing campaign helped them launch strong, build members fast.
Nice. What else?
Franchise entry. Think about a personal trainer wanting to buy into a franchise system. One example used $250,000, covered the franchise fees, hiring staff, all those initial operating costs. Smooth transition.
That makes sense. A lot of upfront costs there.
Definitely. Then there's studio expansion. You see successful boutique owners ready for location number 2.
Common goal.
Very. One owner used $400,000. That covered renovations, maybe some rebranding for the new spot, and importantly, targeted local ads to fill it up. Doubled their reach.
Some bigger moves, acquisitions.
Yep. The paper mentions an entrepreneur who used $300,000 to acquire a gym that was struggling.
Turnaround situation.
Exactly. The funds covered the purchase price, needed equipment upgrades, and retraining staff. Basically revitalizing the whole operation and adding it to their portfolio.
So these examples show real impact. Yeah. It brings up a question, though, why the urgency? Why act now?
Well, Jim Thomas makes a strong point about the fitness industry specifically. Speed wins. The fastest decision maker often gets the advantage.
How so?
Opportunities, prime real estate, a specific franchise territory opening up, a competitor looking to sell quickly. These things don't wait around. They're time sensitive.
Right. If you're stuck waiting weeks for a bank decision.
Or you get denied because you don't have enough collateral by their standards, or your business plan wasn't quite right.
That perfect location gets snapped up by someone else.
Exactly. That ideal space, that franchise opportunity, that acquisition target, gone. Jim's paper argues this term loan gives you the agility to act now, not weeks from now. That's a serious competitive edge.
Okay, wrapping things up then.
Yeah.
Jim Thomas's white paper seems to conclude with a pretty powerful idea.
It does. He observes that way too many gym owners have great ideas, real vision, but they just stall.
And it's not lack of motivation.
Not usually. It's these perceived funding barriers. They just seem too high to overcome with traditional options.
So this term loan is positioned as the way around those barriers.
Precisely. It's fast, it's flexible in how you use the money, it's unsecured, which reduces personal risk, And importantly, it seems genuinely accessible to actual gym entrepreneurs like you listening.
Launching, expanding, acquiring. It covers the key growth stages.
Right. It really could be a turning point, the catalyst that moves your business forward.
Your gym vision deserves more than just being a good idea on paper. It deserves funding, deserves a real shot.
Well said. And if you're listening and feeling ready to explore this, ready to take that next step and see if this funding is right for your gym.
You can reach out directly to Jim Thomas.
Yes, he makes self available.
You can call Jim Thomas at 214-629-7223. That's 214-629-7223. Or you can email him at jthomas@fmconsulting.net.
That's jthomas@fmconsulting.net. Get in touch, ask questions, see if this can help unlock your growth.
Definitely worth exploring. Thanks for tuning in to the Gym Success Podcast.